Good afternoon, everyone, and welcome to the VectorVest YouTube live stream. My name is Glenn Tompkins. Good Gordon, Jen. I'm looking at all of the people chatting in the room. Big time. Thank you all for showing out. Big time. Holy smokes, Joey. We got a lot of folks in here, don't we? We do. Man, say hi to Joey. Joey, this is Joey. This is everybody. Everybody sitting to my right side is Joey. He's my producer. Say hi, Joey.
Hi.
There you go. Richard from Jamaica. Now, Ricardo from Jamaica. Now, wow, the names just keep popping up. Again, thank you so much for coming out to support the YouTube live stream. What is this all about? This is Trending Thursday. My name is Glenn Tompkins. I'm a senior instructor here at VectorVest. It's always my pleasure to host these sessions here where we look at what stocks are trending in the market, and then we use the VectorVest software to give us a better gauge as to if they're good stocks, bad stocks, are there stocks to look at, to watch, or stocks to get into now. There's a lot of different things to look at, but we do use the power of the VectorVest software to analyze the stocks. If you're not a subscriber to the software, Joey's going to put a link in there for you to sign up for a trial. From the trial, you can try this out for 30 days. If you like it, you keep it. If you don't, you don't. But for all of those people who are not subscribers, we will open up the doors to give you a trial, number one. Number two, if you're new and you haven't subscribed to our channel yet, please do so. Right below the video that you're looking at right now, you're going to see a big red subscribe button. If your subscribe button is not red, don't click it. You're going to unsubscribe. So if your button below the screen is red that says subscribe, click on it, subscribe, and then you'll probably see a little bell icon. Click on it as well to be alerted to all of the upcoming videos that we're going to be doing. All right, so comment, like, but big thing, subscribe. We just recently hit the threshold of 10,000 subscribers, and man, you guys are still popping this. This is hopping and popping. We're going to keep it going. Right. So let's get right into it. We got a lot of people. Let's get right into it. The first thing that we always do when it comes down to these Trending Thursdays is we keep an eye on what's going on in the market. If you don't know, VectorVest times the market. Now, before you step up and say that, wait, you can't time the market, there's a difference between timing the market to predict where the market is going to go, which we don't do, or timing the market to stay on the right side of the trend of the market, which we do. I can't say that. Can I say that, Joey?
You can't say do-do.
I can't say do-do? All right. That's what we do. All right, we do try and time the market by staying on the right side of the trend of the market. So, tell you what we're going to do. We're going to start off with the home page of the VectorVest software. This is what happens when you open up to the home page. This is what it looks like, and from this, you're going to be able to glean a lot of great information as to what's going on in the market. Let's start off with our traffic light, our daily traffic light into the market. Right now, the color guard is mildly bullish because we're one tick into the green. Just like a traffic light, green means go. The stronger it's in the green, the faster you can go. In this case, go means buy stocks long. The yellow means slow down. Just like when you get to a yellow light, you're supposed to slow down. I'm from Brooklyn, New York. Forget about it. We don't slow down. We speed up before it turns red. So, but in the real market scenario, when you see a lot of yellow or the market timing gauge in the yellow, slow down. And of course, when our daily traffic light into the market is in the red, that's not a good time to be buying stocks. If you look over here on our quick list, you can see what all of the major indices are doing. The Dow is nicely up today, about 1%. The NASDAQ is up about 0.8%. The S&P is up over 1%. And our VectorVest composite, for those of you who are new, the VectorVest composite is an indexed arithmetic average of all of the stocks that we track. Currently, we track 8,184 stocks. So when we say we time the market, we're timing the move of over 8,100 stocks up, whether it's going up or going down. We feel that it's a better representation of the broad market movement. Whereas you look at the Dow, tracks 30 stocks, but we use it to say that the market is up. The S&P tracks 500 or 100 stocks. We use that as a gauge to say that the market's moving up. Now, the NASDAQ, on the other hand, tracks about 4,300 stocks, but they are tech-heavy stocks, so it's very heavily weighted on the tech side. But when it's moving, we say the market is up. We feel that using the VectorVest composite gives us a better feel of the market because this indicator tracks over 8,100 stocks. Now, if we move over, we see our color guard, and our color guard looks at 3 of our market timing indicators. Price, which is that price movement of the VectorVest composite. Today it's green. Now this is a 6-day snapshot of a traffic light. This will change on a day-over-day basis, but this gives us a nice broader view of what's really going on in the market over the last 6 trading days. We track the price of that VectorVest composite on both the week-over-week and day-over-day basis. The RT looks at what we call the short-term price trend of the market. RT stands for relative timing, and this is one of our core proprietary indicators, and it's cast on a scale between 0 and 2. When RT is above the value of 1, it's favorable because the market's in an uptrend. When it's below the value of 1, as it is right now at 0.84, the market is still in a downtrend, but over the last 6 trading days, this indicator is growing in strength. We're almost to a point where we can call the market in an uptrend, but not quite yet. And the last indicator is the BSR, or buy to sell ratio. Every stock in our database gets a buy, sell, or hold recommendation every day. To get the buy to sell ratio information, which is at 0.09, we definitely have more sells in the system than buys. Because of that, the buy to sell ratio is extremely low. The market is showing a lot of signs of weakness. But as this indicator grows as well, the market will start showing more signs of strength, and everything will be right as rain, as the Oracle says in the Matrix. I'm a big Matrix fan. So if I'm looking at the color guard over the last 6 trading days, what's the main color I see? Yellow. With that, what do? We're going to be a little bit more cautious, but does this mean we can buy stocks? Yes, because we have a green light in the color guard pricing column, which means that the price of the VectorVest composite has risen on a week-over-week and day-over-day basis. There is some confirmation to the up move on a day-over-day and week-over-week basis to say that we have a green light and it's okay to start buying stocks now. Do you back the truck up? No. All right, you don't back the truck up. But this is a good time to start dipping your toe into the water. And we're going to take a look at some stocks that are possibilities to take a look at. Now, with all of that being said, what makes the market move? Well, there's 3 things that move markets globally: earnings, interest, and inflation. All right? Earnings. When earnings are up, companies are making money, they can pay their employees more, they can buy more product and things of that nature, invest in R&D. So that's the good thing. Earnings is always the good thing, but inflation and interest rates are the bad thing. In an ideal situation, in a Goldilocks good situation in the market, you want earnings to be up, interest and inflation to be down. Why? Because if interest rates are high, people have to pay back more higher money on percentage on interest when they go to borrow money. And inflation high means that things cost more money. So in an ideal situation, you want earnings to be up, interest and inflation to be down. So our first stories always center around what the Fed is doing, what's making the market what it is. Keep in mind, there is a difference between the market and the economy. Now, because of what's going on in the market and because of COVID-19, right now the market and the economy have sort of kind of melded together, which is not a normal thing, but this whole thing is full of uncertainty. Keep that in mind. So they are 2 separate entities, but because of COVID-19, the market is being affected by the economy, or the market is affecting the economy. And right now, the Fed has opened up the spigots to be able to do everything that it can to keep the economy going. So let's get into our first story.
Hey, before we do that,
oh, what am I missing?
What those 2 asterisks mean in the color guard?
Our question is, what do the 2 asterisks mean in the color guard? So not only do we have a green light that went up on both a day-over-day and week-over-week basis. From a market timing standpoint, when you put your mouse on it, this market timing call has been confirmed by a different market timing signal called the RT Kicker Combo Timing Signal. For those of you who have never used the VectorVest software, when we talk about timing the market, we have seven market timing signals to be used no matter what type of investor you are. If you are a really conservative investor, we have the confirm call. All the way to the most aggressive investor, we have the primary wave, and then we have calls in between to affect if you're a swing trader, we have the DEW, we have the green light buyer. There's a lot of different timing signals that can be used depending on how you invest in the market. But the asterisk means that it was a green light confirmed by one of our market timing signals. All right? So let's get into the first story. And again, my first stories always tend to look at what things are moving the economy. Fed minutes reveal alarm over coronavirus disruptions to economy. Officials cut interest rates at 2 unscheduled March meetings and launched open-ended bond purchases. So what's happening is they're trying to put more money into the economy by buying the bonds. All right, and that is a way of quantitative easing. It's however you want to look at it. It's a stimulus package that the Fed is utilizing. They have a lot of tools at their disposal to help to bolster the economy. And buying, open-ended bonds or just bonds in general, as they buy them, and it goes into the trough, the money trough. And actually, as long as we keep printing money, we got a trough of money, that's for sure. So, alarm over the coronavirus disruptions to the economy. What do you?
To the story.
It's not changed to the story? Oh, I knew that. Thank you, Joey. Joey was telling me to change to the story. All right. So that's one story in regards to what the Fed is trying to do, but they have some concerns. The next one, the Wall Street Journal survey, coronavirus to cause deep U.S. contraction, 13% unemployment. Guess what? With the numbers that came out on unemployment today, we're pretty much sitting at, 16 million people? 16 million people now unemployed. The number came out this week, I think, at 6%, 6 million new people signing up for unemployment. Folks, this is heavy stuff. There's a lot of people who are out of work, and that number could keep going up as long as we are in the social distancing mode. But keep this in mind, without me throwing any politics in here, think about it. If we didn't have the social distancing, the COVID-19 could be running rampant throughout the country. Think about that. All right, just think about that. It could be running rampant. So I know a lot of people are out of work. A lot of people are sitting at home, working from home. But I think overall, this becomes my opinion. I think what it's doing is it's helping to make sure that the hospitals are able to handle the flow of people who are coming in and out. All you guys that are in New York, please be careful. It looks like that is the epicenter of the growing amount of cases in the United States. My parents actually live in New York, but they live upstate, further upstate. They live in Peekskill, so it's not in the New York City proper area. So I'm hoping that they're okay. But all of you who live in New York, just be careful. All right, so that's talking about unemployment. And then part of the stimulus package, the $2 trillion stimulus package, was for the Small Business Association to start giving out loans to these companies that could be going out of business. Look at it this way. When this is all done and said, we're going to see a new United States. Think about that. A lot of companies will go out of business. That is an unfortunate reality of all of this. And the $2 trillion package that was put out, it's moving slow. It's, everybody who files taxes is supposed to get back $1,200 per person, $500 per kid. I don't know of anybody on my own personal circle who have received any money yet. And they keep saying it's coming, it's coming. But when people got to pay bills, when you have to go to your creditor and say, well, I'm waiting for this money, it's coming, they ain't trying to hear that. But I will step up and say that a lot of people, a lot of creditors are giving some leeway, and I think that no matter what happens in life, when bad things happen, Americans will be Americans. And we always tend to pull together when we need to. All right, so that's just a side note on my part. But the Small Business Association is under fire for failing to get aid to struggling small businesses. This is part of what the package was all about, to get those loans out to the small businesses. But if they're not getting the loans, they can't pay people. They can't pay for people's insurance, all of those things. So this story talks about the Small Business Association being under fire for not getting that stuff out. So all of these things tie into what's going into the market. So let's go look at my watch list today. I'm going to open up the software and go here. Take you good. You're there. Let's go to the viewers tab. And I'm going to go to the watch list viewer. And every week we create a watch list of stocks that we talk about. Today is going to be 4/9/2020. All right, here's the stocks that we are going to talk about. And the two that we look at for the market are the VectorVest composite, which is our indicator that we use for timing the market. And for those of you who are not subscribers, let's look at the spiders, the S&P 500 spiders, SPY. First thing I'm going to do is I'm just going to pull up the graphs. So I have them both highlighted in my list of 14 stocks that we're going to talk about today. I'm going to right-click, view the stock graph. Here's the market. Now here's the VectorVest composite. I'm going to put this on a 3-month graph. Here's the VectorVest composite, which is looking at the movement of over 8,100 stocks. Perceived bottom right here on March 23rd of 2020. And I want to show you something from the standpoint, let's do this. From the standpoint of saying, all right, you guys didn't call out a bottom, but you know, how does VectorVest work to get me into the market at the right time? All right, and now my page will blow up real quick. How many people consider themselves to be a more aggressive traders? Type a me in the room. Tell me when they start coming in, Joey. How many of you consider yourselves to be a more aggressive trader in the market? Type a me in the room. All right, nobody's typing me. It must be either a delay or they're not listening. There they are. So for those of you who are more aggressive traders in the market, remember I told you one of our market timing calls was for the more aggressive trader? I'm going to put that market timing call on. It is called the primary wave, which looks at the week-over-week movement of that VectorVest composite. Is the fastest signal we have. Notice that we had the bottom on March 23rd, possibly the bottom on March 23rd because the market is still now rising off of that bottom. Notice that that call issued an up call 2 days off of the bottom. Folks, I don't know who else out there has got that kind of information to get you in that fast off a market bottom. Now, if you're not that fast or that aggressive a trader, I'm going to put on just a tad bit slower indicator called the green light buyer. That looks for the green lights in that color guard pricing column like we had today. Every time you get a green light, it will issue a call. I'm going to put the green light buyer on. That issued a call the next day on March 26th. Folks, with our market timing, in case anybody tells you you can't time the market, with our market timing, we got the most aggressive people in the market 2 days, 3 days off of a perceived bottom, if that is the bottom. Now, if you're a little bit more prudent investor, I'm going to put on another call. It is called the DEW. It's our technical timing call. Let's put that on. That just issued a call a couple of days ago, which was 4-6. And is that a good call to start as the market rises? So no matter how aggressive or conservative or prudent you are, market timing does work and the market can be timed. So for any of you who are sitting out there and saying that you can't do it, I'm showing it to you right now. And right now, if you're a little bit more prudent, you got an up call. 4/6/2020. Look at that call. On this graph, I have a 20-day exponential moving average, I believe. And yes, I've got a 20-day exponential moving average. That call happened just before the price, even if you don't believe in market timing. Here's the 20-day exponential moving average on the VectorVest composite. Last couple of days, it's above and still moving. So off of this bottom, if you're aggressive, we gave you 2 market timing calls. Off of this bottom, if you're more prudent, we have a market timing call. There it is in a nutshell. So for any of you who have not taken a trial of the software, this in and of itself should be a proving mechanism to tell you that we know what we're doing. We've been doing this over 30 years, all right? So that's looking at the VectorVest composite. I wanted to show you that from this perceived bottom, again, on March 23rd, when the VectorVest software started getting our subscribers back into the market, I've already done several conversations on when we got you out of the market. We got you out of the market round about the 224 time period. Look at that. That DEW call also gave a down call. So we help you both on the upside and the downside. As that down call happened, would that have been a great opportunity to get out of the market prior to all of this? For any of you who are not subscribers, this is how the software works. We will help our customers get in and out of the market at the right time. The next indicator we're going to look at is the spiders. Same kind of scenario. Remember, the spiders track 500 stocks. Our indicator, the VVC, tracks over 8,100 stocks. But look at the S&P 500 starting to move up as well. So that's where we're going to start off, looking at what's going on in the market, the indicators you can use for a market timing call to get in at the right time. And that's what it's all about. And even these calls that we gave on the VectorVest composite was earlier than anybody out there was giving you the upside or the hindsight, you call it hindsight, giving you the insight as to start to play the market. All right, that's my first story. Any questions, Joey?
Yeah, so we're going to take a couple questions, and then we're going to talk about the winner for the giveaway.
Okay, so we're going to take a couple of questions, and then we're going to talk about the winner for the giveaway. We were giving away a options jump starter course from last week, and we have a winner. It's a free course, and especially if you want to learn about options. All right, Joey, what's my first question?
Is there a way to identify stocks that are new buys, sells for the day?
The question is there a way to identify stocks that are new buys or sells for the day? And the answer to that is yes. This is a little bit off topic, but I'll take it. From here, if we have a tool called Unisearch. And in the Unisearch, we can set up any different types of parameters to find any types of stocks that we want. I'm going to go to something called Trends New Stuff. I have a search in here. Take me off the screen for a second, Joey. I have a screen in here or a search in here called New Buys. Joey's going to take me off. There we go. Right here, new buy rated stocks. And I'm going to run that as of today at 221. And here's the stocks out of 8,100 stocks. I've got to search. Here's all my stocks that are just becoming new buys today. Here's my buy, hold, sell recommendations. And yeah, as of right now this afternoon at 2:22, here's the stocks. A lot of them are gold stocks. We're going to talk about that as well today. But here's the stocks, and look how much they're up today. But I can run this search at any point in time to find out what stocks are brand new buy recommendations within the software. All right, next question, Joey.
Why was price yellow yesterday when the price was up over the previous day and the 5-day?
All right, good question. Why was price yellow yesterday when the price of the composite was higher on both the week-over-week and day-over-day basis? Good question. Let me go back to the home page right here. The reason why, well, you got the full home page now. You can leave it there. Go ahead. So the reason why it was yellow yesterday, we moved down one day. Here's the price. All right, working off the prior week's price of $36.79. What's the color of that bar last week? Red. We cannot go directly in the market time, in the price column of the color guard. We cannot go directly from a red to a green on a week-over-week basis. We cannot go directly from a red to a green on a week-over-week basis. Notice the primary wave was up, which is the week-over-week movement of the VectorVest composite. So it rose on a week-over-week and day-over-day basis, but it was yellow because the prior week was red. So notice that today it's green because the price is high on a week-over-week and day-over-day basis, and we're working off of a yellow light. Come Monday, if the price is up on a week-over-week and day-over-day basis, the biggest color or the highest color we can get is going to be yellow on Monday. Next question.
This guy's asking about the software. Is it free or how much is it?
All right, I won't answer about the software just quite yet. You can give our product support staff a call, or Joey, if you can put the link to just the VectorVest page. From that page, you can get all the information that you want about the software and all of the different variables of the software. Joey's going to put that in for you. All right? Any other questions, Joey?
Not really that pertains to
Man, coffee's hot. All right, so let's go on to the next story. Thank you for the questions. Go ahead.
Let's talk about our winner first.
Oh, yeah, Joey said I had to talk about the winner. All right, Camellia Quack. If you're here, type a yes in the room. Camellia Quack. If you are in the room, type a yes in the room. You have to be here live to win. Is that correct, Joey, or no?
But let me tag her in here.
Can you tag her?
Yeah, I did. It let me.
All right. Is she there?
She might be here, yeah.
All right. If Joey can find her, that is the winner of our free Options Jump Starter course. That is the winner of our free Options Jump Starter course. All right. We good, Joey?
Yeah.
All right. So let's get into our next story. And by the way, thank you all for submitting or trying to get into the contest. All right.
Came back on.
Say again?
1 sec.
Yep. All right, let's get to the next story. Interesting story with everything that's going on. People got to shop, right? People got to shop. People got to buy toilet paper. Hopefully you got a lot of toilet paper. You got a lot of toilet paper at home? Joey's the one that took everybody's toilet paper. He bought all the toilet paper. Shame on you, Joey.
Return some. I tried to return some.
You can't return it. You can't return the toilet paper, Joey. You can't do that. All right. So with that being said, Costco versus Walmart. All right, and both of these are big box stores. Costco is the bigger box store, but Walmart is the most popular store out there. Costco versus Walmart, shares are higher for the year. Why? Everybody's got to buy stuff. All right, and you notice I went to my Walmart yesterday, and all of the signs are on the doors saying practice 6 foot away from each other, the whole 9 yards. So even the big stores are trying to make sure that even when you're shopping at a distance of 6 feet. Joey's making sure that no matter what, he keeps 6 feet away from me for the most part. Though both have broken out, Oppenheimer's head of technical analysis, Ari Wald, said that one has the edge over the other. Costco is up 5% in 2020, while the S&P 500 has fallen 16%. So people are buying a lot of stuff, driving up the prices. Not the prices of the stuff, but people driving the stock's price up. All right, so let's talk about that. So that's Costco versus Walmart. Let's get back into the software, and let's go look at that in my watch list. I have Costco and I have Walmart. Let's analyze them real quick. Notice that this list is automatically sorted by our master indicator, VST. So the stock that has the highest value, safety, and timing is at the top of the list. Costco has got a higher VST than Walmart. Now, Costco is slightly overvalued, and so is Walmart. That doesn't make them either one of them bad. It just means people are willing to pay a premium to own them. Upside potential, relative value, both below the value of one. Neither one of them have good upside potential over the next 1 to 3 years as compared to a AAA corporate bond. Interesting. But they are safe stocks. They've been around for a minute. And these companies tend to meet or exceed their earnings expectations. So with a relative safety above one, these are less risky stocks. And what's helping it right now? RT, the relative timing or the short-term price trend of the stock. How about Walmart is in a bigger uptrend right now with RT at 1.27, where Costco is at 1.07. They are both in uptrends, but it looks like right now Walmart's in a bigger uptrend. Now, as far as something else I like to look at, earnings growth, which is the GRT column. Costco grows their earnings at a clip of 11% a year, where Walmart is growing their earnings at a clip of 8% a year. So fundamentally, I like Costco a little better because it's got a more well-rounded relative value, relative safety, relative timing. But Walmart is a buy recommendation right now, whereas Costco is a hold. So let's decide. Let's go to the graphs. We have them both highlighted. Right-click, view the stock graph. Let's take a look at them. Put them on a 3-month graph. All right, there's Costco with all of the coronavirus stuff going on. Holy smokes. A lot of jagicity. That is a Glenism. A lot of jagicity going on. Currently, the stock is above its 20-day exponential moving average after it found a good base or a good level of support. Let me draw that on here real quick. It found a good level of support sitting at about 279.84. Beautiful level, touch. Now bounced above the 20-day exponential moving average. Watch the price now starting to pull back. If I own Costco right now, I leave it alone as long as it's above the 20-day exponential moving average. This is why you have stops in place. The stock is all right as long as it's above. And looking at this low, I'm finding also that I've got higher lows. The stock is actually trending higher from the low. Look at that. Connect the lows. The stock is trending higher off of the low that happened here. So I like that. Even though it's jagging around, I'm going to show you another candlestick pattern. Look at this high. I'm going to connect the highs. Anybody want to tell me what that pattern is? All right, anybody want to tell me what that pattern is? Somebody's going to type it starts with a W. Tell me if anybody tells me what it is. Not yet. Not yet. Not yet. Still not yet. Oh my gosh, you don't know?
Wedge.
There you go. It's called a wedge.
Paul Robertson Fahad.
Say again?
Paul Robertson Fahad.
Welcome, Paul. Thank you for that, Paul and Fahad. That's a wedge. Now, if I'm trading this stock, what am I looking for? I'm looking at a breakout above this level of the downtrend, of the connecting the highs. If I own it, leave it alone. Again, it's above the 20-day exponential moving average. A good way to know to get out, if it breaks below that 20-day, and especially if it breaks to the lower edge of the wedge. Right now, this is a consolidation pattern. Leave it be. All right, at some point, it's got to break one way or the other, right? This is what you do as far as watching it. Let's look at Walmart. Walmart, on the other hand, has got more of an upward trend, not nearly as wedgy as Costco. So look at that move coming off the low, moving up. Definitely more days above that 20-day exponential moving average. A lot more days above. Nice open day today, whereas Costco was pulling back with some doji action going on. But look at that beautiful update on Walmart today. So if I'm looking at them from a price perspective, I like Walmart. From an altogether well-rounded position, I like Costco. All right, so let the graphs tell you the story. So hopefully that makes sense. So that's that story. Let me close out of the graph. Any question, Joey?
No.
All right, no questions on Costco versus Walmart. Excellent. Let's get to our next story.
Kev says, when you were on the 20, what happened to the 3 and the 8?
The question is, I was on the 20, what about the 3 and the 8? So the 3 and the 8, we use more so in our jockey club, Kevin. Now here in the way of our stories, I want to look at them more from a swing trade perspective. Does that make sense, Kev? That's what I'm looking for. All right, I want to use the stories that are out there. I want to use the software to analyze them. But not everybody in this room is a trader like we do in the Jockey Club, which is our trading room. All right, this is more of, let's see what the stories are. Let's analyze the stocks, and let's see from a swing trade perspective what they look like. Did that make sense to him? Excellent. All right, my next story, gold. Gold and silver are rocking and rolling. Now let's talk about, is it the right time to be in gold? How many of you are trading gold right now? Right now, I'm actually trading JNUG. Let me tell you, my JNUG trade, let me tell you what my JNUG trade is doing today. I am up, JNUG, I'm up 14% today. Look at that. I'm up 14%, 14.3% on my JNUG trade today. So now, anybody who's trading gold, is it the right time to be in gold? Is it, how about this? Prime Minister Boris Johnson released from intensive care. Thank God for that. All right, that was the biggest leader, I believe, out there who not only caught the COVID-19, but was intensive care. So glad to see that breaking news that he is out of intensive care. Gold is back above 1,700. Charts suggest an even bigger rally. I won't even read the story. Let's go to the videotape. Warner Wolf. You remember that? Was that Warner Wolf? Let's go to the videotape. Or was it Chris Berman? It was one of the. It was Berman. He's the one that goes back. Yeah. All right. But anyway, let's go take a look and see what gold looks like. Let's go back to my watch list. I only have one gold stock in here. The Spiders Gold Shares. Now, because it's an ETF, the price and the value will always be the same. The relative value and relative safety will always be at 1. It's tough to manage or track the relative value, relative safety on an ETF. But what's the big thing here? It's the RT, or the short-term price trend, is above 1. Gold is in an uptrend, all right? And it's a buy recommendation. So I'm going to take a look at this stock first. Let's do that. Let's take a look at this stock first. Is it the right time to be in gold? Holy smokes. Put this on a 3-month graph. Look at that. Nicely above the 20-day. And you know, with the strength of the dollar or the weakness of the dollar back and forth, it's been a little bit of a choppy ride. It really, really has. But look at the gold ETF. Right now is challenging the 3-month high, which occurred on March 9th. The high of gold, the GLD, was at 159.37, and right now we're at 157.88. I would definitely love to see it above, but if you traded it moving above the 20-day, and look at that, one big down day and then one back above, follow through, follow through, follow through, still moving higher, love it. So gold might be a good place to go. Let's do this. I've got a watch list full of gold stocks right here called gold stocks. All right, in that watch list of gold stocks, I have currently 47 stocks. What makes this list? The stocks have to be at least $1 and they have to be trading at least 100,000 shares average volume. All right, and at any given time, let's say we look at the futures like we do in the Jockey Club and you see that gold is moving up. If I have this watch list of stocks, I can sort by percent price change and I can take advantage of whichever gold stock is moving up that day. Today, CDE, Coeur Mining, up 18% today. Cisco Mining, up 13%, and so on and so forth. But if I can run this watch list of stocks earlier in the morning and sort by percent price change, and especially knowing that gold is on the rise, I could make a lot of money really quick. Now, I'm going to take this as a different scenario. These are 47 stocks, right? Notice at the bottom of my watch list, I have a watch list average right here. I have a watch list average. If I right-click on that watch list average, I can view the average of all 47 stocks in one graph. And as a whole, I can see that that listing of stocks is starting to run higher. Now, what is it also doing? Moving sideways. That makes sense. Is gold totally broken out and started running rampant? Not yet, but I can see that overall, those 47 stocks as a whole are above the 20-day exponential moving average, but it is doing a little bit of sideways mumbo. So can I play gold? Yes, but be very careful with it. All right, yes, I'm in JNUG, but I have a stop on JNUG to make sure I manage the position. So we had an opportunity to look at one gold stock, GLD, which is in the S&P, and then the watch list of stocks that I've created. Again, 47 stocks. Every stock's got to be at least $1, and the average volume on these stocks has to be at least 100,000 shares. That's how I comprise that watch list of gold stocks. I notice silver is in here moving up as nicely as well. MAG up 10.17%. Pan American Silver, PAAS, up 9%, and so on and so forth. So I'm looking at gold and silver in one watch list. Any questions, Joey?
David asked, would you hold or buy?
When you say would I hold or buy, I'm going to manage. Right now, I would hold and manage the trade by way of a stop. That's the honest answer. I'm looking at that watch list answers that question for me. If it's moving sideways, I'm not going to buy any new positions yet. Let's see if it can break out of this sideways move. If I'm looking at an individual stock, let's start looking at CDE. I'm not going to look at all of these stocks, but if I look at the individual stocks, that will tell me the story as well. Zoom in. CDE broke above the 20-day exponential moving average. Your question about would you buy or hold has to be looked at on each individual stock. CDE, I would love to see it get out of its own way, but a nice up day today. If I like a nice up day today, I put a 5%, a 5 cent buy-in order higher than the high. All right, but I like the move coming off the bottom. Higher lows, stock is moving higher, but it is sitting sideways right now. All right. Any other questions, Joey?
How often do you adjust your stops as the stock rises?
How often do I adjust the stop as the stock rises? It all depends on the type of stop that I'm using. If I'm using a trailing stop, it automatically adjusts. If I'm using a gain-loss percentage, I will only manage it or adjust it if the stock is pulling down, so I want to lock in profits a little quicker or mitigate losses a little faster. So I don't have to automatically adjust. Let the stock do its thing. You know, when I'm looking at that 20-day exponential moving average, that's a stop in and of itself. If the stock's price falls below that 20-day exponential moving average, that's a good time to get out. I don't have to adjust that. That moving average is moving up with the stock. All right? Any other questions?
Jay asked, how about gold miners?
Gold miners, I can look at them in like Nugget or JNUG. Nothing wrong with that. Right now, again, for my gold stocks, I'm only really looking at the mining stocks, but you can do the gold and silver stocks, but you can do the miners as well. That's not a problem.
How do we build a gold watch list?
How do you build a gold watch list? If you go to the industry viewer, and I can go find and sort the industry viewer by industry, and I would go find mining. Boop, boop, boop. Where's mining? LM. I go to mining, gold, silver. Right click on that, view the stocks in that industry. And I put all of these stocks into a watch list. There's 128 of them. I'd put all those stocks into a watch list, and then I would filter them out so that the price has to be greater than $1. All right, do it again. Any stock that's got a price less than $1 comes out of my list. See all these stocks less than $1? I would highlight them all and delete them after I put them into a watch list. Got to put them all into a watch list first. Highlight that, and then I would sort to make sure that all of the average volumes are greater than 100,000 shares. That's how I created that watch list. Any other questions? Actually, Joey, I got to keep moving because I got a special guest coming on a little later. All right, good? All right, let's get back to my watch list. All right, great question about how to create that gold watch list, though. Let's go back to our watch list, 4, 9. What's our next story? Next story, stocks that caught my interest. Zoom. Remember this, man? Zoom. You remember Zoom? I do. You do remember Zoom. I think that was an up north thing. Anyway, Zoom banned at Google. Noting security vulnerabilities, Google has reportedly banned Zoom from its employees' devices. From church perspective, I've been using a lot of Zoom for church services and groups in that nature. This is just interesting that because of their vulnerabilities, Google said, nope, you guys can no longer use it. So we'll take a look at Zoom. Next story that caught my attention, Tesla. Tesla's China sales hit record high in March. Interesting, with all of this coronavirus going on, who are they selling cars to? I don't know. Anyway, they're selling them. If you scroll down a little bit, where's it at? It sold 10,160 cars in China in March, its highest ever monthly sales in the world's largest auto market. So Chinese folk drive a lot of cars, which is kind of cool. But and Tesla is tapping that market, and that's what's going on. Tesla, which aims to produce 150,000 Model 3 sedans from its $2 billion Shanghai factory. That must be a big factory. All right, but Tesla caught my attention. And Carvana, there's another car company. Carvana is up 16% on confident take from Wells Fargo. So this was a third party jumping in. Wells sat down, they were drinking their coffee from Starbucks in their Starbucks coffee, drinking Cafe Bustelo, the unofficial official coffee of the Trending Thursday, done by Glenn Tompkins. And they said, hey, we like Carvana. And Carvana said, hey, thank you for liking us. On a strong day for the market as a whole, Carvana rallies after getting some attention from Wells Fargo. The firm added Carvana to its list of high-growth payers with attractive long-term entry points due to market dislocation. What did it dislocate? Anyway, analyst Zachary Fadum also notes that Carvana has a long cash runway of 15 months after recent financing actions. No, you don't have to scream. Just me, I scream. All right, that's my guest sitting in the background. We're not screaming for ice cream. So very interesting. 3 stocks that caught my attention. Let's go pull those up real quick. Trending Thursday, where's it at? There's Tesla, there's Zoom, and then there's Carvana. All right, 2 car companies actually making big sales during the time of the COVID-19. Tesla, way overvalued. Just means that people are willing to pay. And why are people still interested in buying into Tesla? Because it's the electric car. And the hype over what he's doing is just way up there. Zoom, way overvalued. Why is it going up? Because everybody's moving to that platform because they're at home. Carvana, way overvalued. Why? You know what I like about Carvana? You can go put this little coin in the machine and then it finds your car and then you can drive off, or they'll drive it to your home. All right, notice that Tesla is growing their earnings 30%, Zoom 31%. Carvana, on the other hand, is losing money at a clip of 6% a year. Which ones are in an uptrend? Zoom is in an uptrend again with the increase of people jumping on board with it. I can tell that is the reason why it's up. Tesla, on the other hand, even with all of the cars that they're selling in China, it's not in an uptrend yet. And Carvana, where the RT below 1 is not in an uptrend. Another thing about Tesla is relatively safe stock. It's got a safety at 1.29. All right, let's go take a look at these 3 stocks. Again, these are stocks that caught my attention. All right, in the news, let's go look at Tesla. Big sales in China. Big trouble in Little China. Remember that movie? Who was in that movie? I don't remember. It was Jackie Chan. No, it wasn't Jackie Chan.
Swayze.
It was Patrick Swayze.
It was Kurt Russell.
Kurt Russell, that's what it was. Kurt Russell. Look at you, Joey. All right. Tesla, just coming off of a bottom. Look at the rising lows and look at the stock above the 20-day exponential moving average. Tesla's starting to move. This could be a good early entry on Tesla. And if you think the stock is too expensive, buy options. All right. Let's go to the next one. Zoom, even with the COVID-19, I think this is because of the news of the securities issues with them. They fell. With the COVID-19 kicking in, though, a lot of people jumping on board. The news coming out about the issues with security, the stock's price fell below the 20. I would wait until it goes back above the 20-day exponential moving average. And Carvana, again, look at the big swing from the low, moving higher, breaking above a level of that 20-day exponential moving average. Today's sales, today's candle, though, a lot of wick at the top. That's a lot of selling pressure, also known as a shooting star. So those are my 3 stocks that caught my attention. Any questions, Joey? No? Good. Let's
just bring Jim in and then we can finish up.
All right, so I got a special guest today. For those of you who are more retirement-minded, I'm going to bring in Jim Penna, who is our manager the manager of retirement. He's going to take my mic and he's going to come talk to you about a webcast or a series or a course that's coming up live in a couple of days. So Jim, make your way over here.
Hello, everyone, and thank you, Glenn and Joey, for allowing me to. I feel like I'm sitting in the Oval Office behind the Resolute desk
You
here.
are.
I feel very important right here.
You should be.
Very tough act to follow here in Glenn, but I wanted to take just a moment to tell you about an event we got coming up next Friday on April 17th. It is a live stream video for the Ultimate Retirement Solution course, and I'm very excited to be hosting that day. We're going to do it right here from our training center. And I'm going to spend the day going through what is now our digital course. It's a 6-week digital course, and we're going to do the event for everyone right online. So Glenn was kind enough to allow me to come in and talk for just a minute about it. And I want to walk through what the course entails and just let you know what we're going to be doing. Now, there's a lot going on in the market, as we know. And as Glenn just alluded to, it's a little bit of a different mindset, what we do. But we still use VectorVest to make sure of several things: how we analyze the proper retirement stock, how we use market trends and market timing to make sure we enter and build our retirement portfolios at the proper time. It is easy to build your retirement portfolio, quite frankly. The hard part is the risk management and the management of that retirement portfolio, and that's really the core, I think, the most important core of what we do in the Ultimate Retirement Solution course. Joe, can I just click on this and walk through? Okay, great. So I'm just going to click here. And so what Joey was on was our events page, the vectorvest.com//events. And you saw the event listed there right at the top. So what you see here is the summary page, and it pretty much gives a nice outline of what we're going to be doing next Friday. We believe that there are 3 core strategies that every retiree must know. And that is the ability to grow their portfolio through capital appreciation, to be able to generate safe, steady income through 2 parts. 1, good quality dividend growth payers, and number 2, the ability to sell covered calls. Okay. And then finally, the 3rd core strategy is the ability to be prepared for times like we've seen over the last 5 or 6 weeks. Our retirement portfolios, yes, they've had a little bit of drawdown, but our risk management techniques have us mostly in cash, and for those portfolios, using not only covered calls, but we use put options as insurance policies, and this is what makes the URS course a little bit different. It is the risk management of these portfolios that we use. So the ability to understand, first of all, how to find the proper stocks. We use what we call the 3 Ps, and you can see here on the screen, it's profit, and that is capital appreciation. Good quality, high relative safety stocks. Provide, generating that steady income. We don't want your portfolio just having a couple of random dividend stocks that might generate a trickling of income to you. We want that safe, steady flow coming in. And then finally, and again, not just because of the last 5 or 6 weeks, but we can go back not that long ago, the beginning of 2018, the end of 2018, and then currently what we're going through. You can get through those type of drawdowns and by protecting yourself, understanding, again, 2 very basic option trades. You don't have to take some advanced course. That's what the URS course is all about. We will teach you the anatomy of a covered call. We will teach you exactly how and when to place your protective put options. That's all under the preserve header there. So you can scroll through the summary here. It will give you exactly what we do in each portfolio, how to build and manage your capital appreciation, the importance of that steady income through dividend growth payers, the importance of dividend safety, earnings growth rate when it comes to those. A lot of questions come up about dividend stocks now because of what's going on. Our company's going to be able to continue to pay and grow their dividend. Well, in the live session on Friday, I'll have a couple of alternatives to talk to you about that have come up based on what's going on now. All right, so I talked about our live stream, which is next Friday, April 17th, 9 a.m. Eastern Time. We talked about building the capital appreciation portfolio. We will walk step by step exactly how to use the VectorVest program to find the right stocks at the right time, and more importantly, place the proper risk management techniques. We'll do the same for the dividend portfolio. And I mentioned, I'll repeat just in case somebody got cut off, yes, it is a time where folks are worried about their dividend stocks and their dividend payouts. The strongest companies will continue to pay and grow their dividends, I believe. But we'll talk about some alternatives in the Friday session that I've been working on since this crisis began, and we can talk about it live. It's the beauty of having a live session. And then finally, create your income stream and the strategic defense system that you'll see in the summary here. I was starting to say that when it comes to protecting your portfolio, just think of a put option as an insurance policy, right? There are 2 very basic, very popular option trades that if you're managing your retirement nest egg, it's my opinion that it is essential that you understand the covered call and the protective put. And I was saying earlier, you don't need some advanced options course to do it. You don't need to go out and read 15 different books to be able to do it. Sessions 4 and 5 on the live stream, I'm going to walk you through the anatomy of a covered call and exactly how, when, and why to place a protective put for insurance. So it's really what sets apart a lot of what we do when it comes to portfolio management here at VectorVest. So I look forward to walking through all that. And then finally, we'll walk through implementing the entire plan. And we'll even throw in a bonus session at the end. We'll talk about trading spreads for monthly income. We'll introduce you to that. And it is all about, we'll call it part 3 of the income portion of the 3 core strategies, because selling covered calls or selling credit spreads are fantastic ways to pad your bank account to continue to get that steady flow into your portfolio. And so, again, thank you, Joey. Thank you, Glenn. If there's any questions, Joey, I'll take 2 seconds and answer if there's any questions on it. But if you go to the vectorvest.com/events page and choose the Ultimate Retirement Solution 1-day live stream, you'll see the summary here. You can click on register, and you'll know that it's $4.95 is the early bird. You can have that price up until April the 15th, I believe. And just, if you're an elite subscriber, if you happen to be an elite subscriber watching, just know $4.95 is actually $2.50 better than your elite pricing. So you don't have to call in or anything. You can go ahead and sign up. You will have access to the entire 1-day live stream for 1 year after. You'll get a workbook, you get all the slides that we use, and we'll have a moderator. We'll be able to interact live throughout the day. Okay, so Glenn, thanks again. Joey, thank you. And if there's any questions, these guys will help you out, or you can give a call.
All right. Thank you for sticking around for that. Jim Penna actually is is actually our manager of retirement. And for many of you who are not subscribers, we don't always just talk about trades and learning to protect your portfolio. Your long-term nest egg is what Jim is all about. So thank you for doing that, Jim. I had one other story, but you know what we're going to do? I think that what we're going to do is we're going to go right into looking at your stocks. With what Jim did, I think we're good with the stories. My last one was going to be on coronavirus. I'm going to hold off on that until next week. All right, so I think we covered a lot of good stuff today. If you can, stop. The prize winner, Tony, did she come? Did she?
Yes, I got her.
Oh, we got her. We got Camellia Kwok. We got her. So, Tony, yes, it was claimed, my friend. And maybe next week we'll do, all you can hear is Jerry D singing. That wasn't Jerry D, Jake. That was Todd.
He's trolling you.
Oh, is he really?
Yeah.
Okay. All right. So with all of that being said, let's start looking at some of the stocks that you want to take a look at. I won't be able to get them all, but I'm going to work on as many as I can. CNC, NVAX, comma. Wow, nobody's typing in stocks. If that's the only two, I'm going to leave them alone. AMIT, comma, that's a good trade right there, Roger. I made a lot of money on that. IMPUY Platinum earlier this year. I made a lot of money on that. JP Morgan. All right, silver is another good play. Ford, I like Ford because they are making ventilators right now. So I do like it from that perspective, but Ford overall is not that good a company overall. We already looked at gold, Charles. MYL, comma, Shopify, comma, Pins. What is that, Pinterest? Yep. Comma, Ego, that's another gold stock. Comma, is that INSG, Inseego? I don't know much about them. APA, comma, Amazon, comma, Air Canada. I don't think I'm going to be able to pull that up in here. I'll look at FANG. I'll look at Love, which is Southwest Airlines. Oh, FANG, comma, oh crap, FANG, comma, LUV, comma, Lyft. I'm only going to take a couple of more. Ford is already in there. Square, comma, INTC, one more. I'm looking for a new person. Amit, PVAC. All right. Joey, do me a favor. For anyone whose stock I missed, for any stock that I missed, and I'm going to put one in there, James. Somebody I do know, PBR. I'm going to put PBR up there. All right, for any stocks that I missed, Joey put a link in there for you to be able to analyze any stock from VectorVest for free. All right, any stock from VectorVest for free. Tanya, watch MITT. They are going through some kind of litigation. Be careful with that. I see the stock is moving up, Tanya. Be careful with that. In our Jockey Club, we've been looking at it. I would say be very careful with that MITT trade. All right, there is some news behind it on some litigation, so just be careful with that, all right? And there is the link for the free stock analysis report. All right, so anybody who's still putting in stocks, again, I've only taken the ones that I can do and finish up for the day. Joey's got a link in there for you to click on where you can analyze any of your stocks from VectorVest for free. APA, Apache, petroleum stock. Petroleum is starting to move again. Not ready, especially not APA yet. I like that it formed the base. I like that it formed the base. It tried to get above the 20-day, but look at that. That 20-day serving as a good level of getting in or getting out. Right now, it's closing below. Be careful with that. I'm not ready to touch it yet. Not ready to touch it yet. Let's go to the next stock, Ford. Again, with the advent of them making ventilators, they started moving up. I do have higher lows. Even though it pulled back, I do have higher lows. Today is a down day. It's up because it gapped up, but the price pulled up from its open price today. Be careful with that. If you're in it, though, it is still above the 20-day exponential moving average, and leave it be, all right? Next stock. Wow, Amazon. Everybody's ordering a lot of stuff off of Amazon, right? Stock coming off a low, moving higher. Look at that, higher lows, was in a channel, broke out of the channel. I like the break out of the channel, which happened on 4-6, followed through the next day. Today is a down day, that's fine. The stock is above the 20-day exponential moving average. It has broken above the level of resistance. Leave it alone right now if you're in it. If you're not in it, I wouldn't be buying it today. It's a down day. I'd put my order in 12 cents higher than the high. All right, let's go to the next stock. Kareem, double top on which top? On which stock? You talking about on Amazon or what's the other one? Nope, it's got to be on Amazon. I don't know if I call that a double top. It pulled back down. Right now, I do like that Amazon broke out and just leave it there the way it is. All right. If you keep adding in new stocks, I cannot add them in today. All right. Just keeping that in mind. That's why the link is there for you guys to jump on board with. All right. Southwest, double bottom. Then I got a double bottom there. And on Ford, oh, was it a double? Now, Ford was just going down until the advent of the ventilators. They started moving up. Overall, the fundamentals on Ford are not there. The fundamentals on Ford is just not there at this time. All right. Southwest, you know, the air industry, the travel industry has been affected adversely. They're definitely in a downtrend since the COVID virus. They're trying to make a run, not ready to pull them up just quite yet. Not just quite yet. All right, Intel, nicely above its 20-day exponential moving average. A little pullback right now, but still trading above the 20-day. And if I drew connecting the lows, I'm still hitting higher lows. The stock is overall from this low in an uptrend, just pulling back right now. Not a time to panic. You do have a level of support sitting at about 55.38. Let's see if that level of support will hold, if it'll bounce and keep moving up. But if you're in it, leave it alone. I wouldn't have been getting in it today because the stock's price is going down. Always make sure before you pull the trigger on the stock price, make sure it's going up. All right. Mylan Labs, another drug company, a lot of sideways move on it. Look at that, a lot of sideways move. I've got a level of resistance currently sitting at 1693. Let it get above that level. I like that it's above the 20-day exponential moving average. Let it get above that level of resistance. Once that happens, it's got clear sailing up to 2311. You got a good opportunity once it breaks through that level of 1693. Let it run as long as it stays above the 20-day exponential moving average. You guys still keep putting stocks in. I'm not going to be able to look at them. All right. Next stock, JP Morgan, also coming off a level of a low. Notice that a lot of stocks are exhibiting the same characteristics right now, where they're all hitting higher lows, coming off of a level of a low, moving higher. I'd like to see it get out of its own way as well. Nice up day today, but a big wick at the top, a little bit selling pressure. A little bit of selling pressure right here. So that's where that stands. Be careful. It is above the 20-day exponential moving average, but I have some selling pressure. All right, let's go to the next stock. Wow, NVAX, another drug biomedical. This happens to be in my coronavirus watch list, rocking and rolling, nicely above the 20-day exponential moving average. Right now, I'm showing a little bit of a down day. If I'm in the stock, leave it alone. That 20-day exponential moving average is going to serve as a good opportunity to manage the trade. Love the upward move on that stock. Let's go to the next stock. Same thing with INSG. Telecom Cellular. Went above the 20-day, broke through a level of resistance right here. Look at that run. Nice open candle. Stock recently become a buy. If I'm not in it now, let's wait till it breaks above this level of resistance, sitting at a price of $9.70. I'm only 40 cents away. Let it break above that, showing that upward move. If you're already in it, leave it alone. You're happy. If you're already in the stock, you're already happy, let it be. If you're not in it yet, I would say wait until it breaks above that level of 970. Put in an order about 975 to make sure you're buying into a stock that's still steadily rising. But love that above the 20-day exponential moving average. CNC, same kind of scenario. Look at the move above the 20. Broke through one level of resistance, two levels of resistance, and still moving higher. Look at the lows, higher lows, stocks in an uptrend coming off of the low. Love it. Now, see that wick right there? The wick stopped right at that level of the 3-month high. which was sitting at 68.64. That wick stopped right at that resistance level. That is the reason why I like to wait for a stock to go above the level of resistance before you go and buy it. All right. EGO gold stock, same kind of scenario, higher lows, broke above that level of the 20-day exponential moving average, but what's it doing overall? Watch it. It's moving a tad bit sideways. Let it get above this level of resistance sitting at 832. That's a little bit room to go. If you get into it now, use that level of 832 as a price target. But if you want to give it more room, wait until it breaks above that. You got good upside to the level of 1129. Excuse me. All right, let's go to the next stock. Silver, right along with gold, starting to move. Recently jumped above the 20-day exponential moving average. I would go about 5 cents higher than the high. Big wick on it as well. Look at that wick. Big wick on the stock today. Closed green candle as well. A little bit of a bearish, bullish day, a bullish, bearish day on it. Be careful. I would like to see more confirmation of upward move if I'm not already in it. If I got in it because it's above the 20-day exponential moving average, I'm fine. Leave it alone. Next one, EFC. Man, look at that. Nice level of support sitting at $3.59. Bounce above that level of 20-day, 2 solid days. This stock has got good clear sailing up to the 3-month high of 1912. If I'm not in it yet, though, I would rate to buy it. The high price is $11.83. I'd put in an order 5 cents higher than $11.83. I like that. And once that happens, you've got good clear sailing up to that level of the high. That's your level of where you would think about getting rid of it or taking some off the table. I like that big time. But love the 20-day exponential moving average, nicely moving higher. Make sure you're buying into the stock as it's rising. IMPUI, I made money way back here, way before the coronavirus hit. Somewhere up in here, I made a lot of money on this trade. Then coronavirus comes, then the stock pulls back a little bit, breaks below that level of support. What's it doing now? It's getting ready. It's getting ready. And watch the wick today. I got a lot more selling pressure on the stock than I had yesterday. So just be careful. I like the movement above, but I want some more confirmation before I pull the trigger. All right, I want a little bit more confirmation before I pull the trigger. Let's go to the next one. FANG. What was the last stock before this? Before IMPY, EFC. EFC. All right, EFC. Let's go to the next stock. IMPUI. It won't load FANG. Don't know why. Let's go to ABBV. Love the move coming off the low. Nicely above the 20-day. Broke above a level of resistance. Moving up. I like it. Now, I do have a level of resistance sitting at 85.82. If I'm in the stock, why not use that as a profit target? And once I get there, maybe I take the trade off or I take half of it off because if it breaks through, I got another level of resistance sitting at 91.93. All right, 91.93. But I love the move. I like that. Make sure you buy 12 cents higher than the high. Now, you'll notice sometimes I say 5 cents higher than the high. Sometimes I say 12 cents higher than the high. If the stock is less than $20, 5 cents higher than the high. Higher than $20, 12 cents higher than the high. But I love the move, moving higher, and I love that it's above the 20-day and broke through a level of resistance. All right, let's go to the next one, Shopify. Man, Shopify looks like it should be rocking and rolling, but it's just not. It can't get enough traction to just go. All right, nice up day yesterday, a little bit of a pullback day today, but it is clearly above the 20-day. You'll notice I love using that 20-day for the purposes of swing trading. For those stocks to get me in and out at the right time. If I'm more of a trader, I like using a 3 and an 8 exponential moving average. Let's go to the next one, AMIT, another stock coming off of a low, moving higher, just broke through the 20-day exponential moving average yesterday. What's the FA on SHOP? What do you mean FA? Tell me what you mean by FA. It broke above yesterday, followed through, not really today on a down day. I want to make sure, remember, breakthrough, I want to buy on an up day. I want to buy on an up day. AIMT is not showing me an up day today. All right, so let's go to the next stock, Square. Boop, boop, boop. Fundamental analysis. So what's the fundamental analysis on Shopify? Let me go real quick. Shopify, let's go look at RV. RV, below 1. So the upside potential is not there, but Shopify has got some safety. So half of it, this is more of what you would call a conservative stock that's just getting beaten up right now. Put this on a 1-year graph. Shopify over the last year was moving up nicely prior to COVID, but this is more of a longer term stock, just not the right time to be in it. Not the right time to be in it. And DM for profit, that's a good thing. You can always pull up stock analysis report to get your fundamental analysis. How do you put moving averages on your graphs? Go to the price box. If you go to the price box and right click on it, you see here where you can add a moving average. That's how you add moving averages to your graph. All right, after Shopify, what do we have? My voice is slowly but surely going. Had a busy last couple of days, so I apologize for that. Square did not want to come up. You're welcome, Red Eagle. Square doesn't want to come up. All right, that's fine. PVAC. Hello, Chewy. PVAC. I'm not feeling it just quite yet. Another petroleum stock where I'm not feeling it yet. Let the stock break above that level of the 20-day exponential moving average. The stock had been getting killed, trying to make a rebound, but can't get above that 20-day exponential moving average. Let that happen first. Why are you not using the 3 and the 8 today? Roger, because from the standpoint of the news that I'm trying to do on Trending Thursday, I'm looking at these stocks more from a swing trade rather than a trade. And for the Jockey Club, I love using the 3 and the 8, but I'm switching gears here. When we look at the news on these stocks, whether they're good, bad, or indifferent, I like to look at it. I'm going to start looking at them more from a swing trade perspective. Does that make sense, Roger? Because not every person in here is a subscriber to the software. All right, so maybe some people will walk away with a good sense of, hey, VectorVest found me a good trade. I'd rather do it on a swing trade perspective rather than on a trade perspective. Does that make sense, Roger? That's why. All right. And last couple of stocks. Lyft. I like, again, look at the low. Look at the trend line connecting higher lows above the 20-day exponential moving average. A little selling pressure today. Big wick at the top. A little selling pressure today. Be careful with that. I'd rather buy on a candle that's nice and open, not on a candle that's showing me some give back. All right, next stock, Pinterest. Higher lows. Again, a lot of these stocks are exhibiting the same characteristics as the market is moving. Keep in mind that the market's direction affects 80% of the stocks in the market. A lot of the stocks that are in the market are exhibiting the same characteristics that the market's move is doing. So the stock is above the 20-day, a little bit of a spinning top candle today. I don't know if I would have bought it today, but go put your order in 5 cents higher than the high. Make sure you're buying into the stock as it's rising. Last stock, PBR. Wait a minute, ain't that a beer?
And the professional bull riding.
And the professional bull riding, but it's a petroleum stock. It's a petroleum, Pabst Blue Ribbon and the professional bull riders and Petro Brazil. It's got all of those things. What does swing trade mean? Swing trade means that you're holding stocks, trying to hold stocks for a couple of days to a couple of weeks. In the Jockey Club, we specifically try to trade some stocks. But as a swing trade, I'm trying to hold stocks for a couple of days to a couple of weeks. Using that 20-day exponential moving average gives me a little bit more confirmation of a longer term hold. All right, Lynn, does that make sense? That's why I'm using the 20-day. I like that you guys realize that I did move from the 3 and the 8 to the 20, and now hopefully you understand why. All right?
They're paying attention.
Who's paying attention? They're paying attention. I agree. Joey is saying you guys are paying attention. Market seems to be fizzling down. Is that giving a hint for Monday, Glenn? You know, I'm done looking at the stocks. Let's do this real quick. I'm going to pull up one more graph. Let's go look at the VVC before we close out today. Let's see what the market is doing on an intraday basis. It's going to go from end of day to intraday, 5-minute bars, current day. Market is, now when you say the market is fizzling, is it really? It's still higher. This is the open. It's still higher than the open. I'm not going to call that fizzling. Here's the open price. We never faded the gap from this morning. This is just insight going into the close of business today, folks. All right. So for all of you who are here, this is just some added stuff. I know I'm over, but this is just some added stuff, all right? Here's the open of the day. We never got close to fading the gap of the open today. The DTI kissed and now separating. Let me see, I could put the MTI on here. I didn't put the MTI on here. Dag nabbit. That's all right, I'm not gonna put the MTI on right now, Kirby. This is just some insight. So, you know something, even with the uncertainty in the market, how comfortable you want to be holding stocks overnight. Now, let me go take off the 20 period. Now I'm gonna throw on the 3 and the 8 for the purposes of, from a trading day today. The 3 and the 8 are about to cross coming into the close of business today. We only got about 45 minutes left. So I'm not gonna call it fizzling. It fizzled, found the floor, the 3 and the 8 are about to cross. Anybody who's new to the 3 and the 8, I won't explain it right now. This is just added bonus footage. That's all that this is. This is added bonus footage, and I'm gonna add, where's it at? Add a parameter, capital appreciation. I'm on the VVC, not the market timing graph, a little different. Stock, market timing, intraday, 5-minute bar, current day. Now I'm gonna add another indicator that you'll only find here called the DTI. This is our day trading signal. Yeah, we're not above our value of 1.2, or are we? So, folks, if you're new to the software, we got some stuff for you. All right, we are above our trigger point of 1.20. The market still is in an uptrend. This is for the people who are subscribers, who have real time. For those of you who are not, guess what? I've got a day trading timing signal. A day trading timing signal. For timing the market. How is the market timing different from the market climate? The market climate looks at the things like earnings, interest, and inflation that move markets globally. The market timing looks at the move of over 8,100 stocks, two different things. All right, should I learn to short in this bear? George, if you don't know anything about shorting, I'd tell you no. And right now, I think we are too much bouncing off of a possible level of support or a level of a low to start thinking about shorting. I wouldn't touch it yet. I think it's a little bit too late to short right now. All right, can you place a trailing stop on a typical graph? No. No, I can't put a trailing stop on a typical graph, but I can put it into a portfolio. All right, you guys asked a lot of good questions. That's the reason why I wanted to give you some insight as to what the market is looking like before we close. Could you explain how to add an EMA? I showed it today. Right-click on the price box to the right. Right-click on it. Go to add moving average. You can put either a simple exponential or weighted moving average. That's how you add a moving average to the graph. With that, folks, thank you for being here. Sorry about the mix-up today with the stream, but you know something, the majority of you still stayed. All right, Demetrius, go click on the link for the stock analysis report. That way you can get all of the analysis you want on Chewy. All right, with that, Joey, can you type it in just one more time for me?
The what?
He's looking for stock analysis report.
Yes.
Joey's going to click that in for you, Demetrius. Click on that link, type in Chewy, and you will see that. All right, with that, folks, thank you all for being here. I'm glad I'm getting an extra day off because this week was a lot of webcasting, a lot of talking. My voice is feeling it. It is feeling it. But thank you all for being here. You know, I'm a Christian, so I'm going to tell you, I'll put it out there. Happy Easter. Happy Easter to all of you. And know the reason for the season. That's all I'm going to say about that. Thank you for being here. My pleasure. And I will see you next week. And with all of that, I got to go. Adios, arrivederci, ciao. Peace. Thank you for taking the time to watch this video. Now, if you're new to the software or would like refresher information about the software, click on this Getting Started video right here. Thanks to all of your input, here's a YouTube video that we think would be perfect for you. Click right here. If nothing else, folks, just hit the subscribe button right here.